Hey, good afternoon, guys. It's Steve Salindor here, and it's Monday, March 21st. And I'm just shooting this quick video on how to properly place support and resistance lines. And I'm actually in the middle of a trade right now on odd USD. So me and a couple of people I'm working with right now, we traded this pair, and I'm going to show you guys how properly placing, just using simple tools as support and resistance lines, how it can go a long way. Now, once again, what you want to do and what you want to look for is you want to place your support and resistance lines on the higher time frames. And the reason being is if you place them on the smaller ones, support and resistance line, there's, they're gonna break easily off the smaller time frame. If you put support resistance on, let's say the 5-minute time frame, because of recent data, because data is constantly moving on a smaller time frame. It's constantly in motion. These candlesticks are always moving every 5 minutes. These support resistance lines are gonna break like every so often. By doing it on the higher time frames, it's going to take longer for those support and resistance to break, and they're going to hold. And not only that, they're going to they're going to reflect more on the smaller time frames, as opposed to doing it on the smaller ones. When you move up to the higher ones, they don't accurately balance out. Then you'll notice on your charts you're going to just have too many lines. All right, so one of the things you have to realize is support and resistance. It allows you to predict with a high degree of accuracy what price will do next. That's why we place support and resistance line. All right, so what are we looking for when we're placing them? We're looking for recent data. Recent data is important. What I mean by that is what currently happened. All right. So if you see support and resistance, a week ago, that's more relevant than something that happened, 6 weeks ago or 6 months ago. All right. We're looking for recent data, recent action, because the likelihood of that area being touched again is there's a high probability of that, coming into play. All right. Now, one thing you got to understand when it comes to support and resistance is you have to adjust these areas regularly. All right. You don't just place them and you think you're good. You just leave them there and you're done for the day, the week, so on and so forth. Especially if you're placing them on smaller time frames. Like I said, if you place them on like a 5-minute time frame, you're gonna have to constantly move your support and resistance lines over and over again. All right. So you got to update your support and resistance lines regularly. And third, most important part, because I get asked this a lot, oh, Steve, my support and resistance, they're not accurately lined up as yours. They don't have to be. As long as they're within the area, you're good to go. All right. Support and resistance can't be perfect. Nobody ever placed perfect support and resistance. What you're looking for, the main thing you got to keep going is you're looking for recent data. And what you're looking for is, make sure that you're looking for those areas like of bounce, previous M's, your W's, you know what I mean? So when you place them, you see that it properly lines up. So you create yourself a map throughout the market, all right? So today, me and my team, we took a trade on the odd USD pair, and we placed in some sells. So I'm going to show you how utilizing just the higher time frames, like the weekly, that's the time frame that I really like to trade off of, the weekly and daily, how it easily laid out a map, and it allowed me to, when we were able to enter the trade and put ourselves in a high probability chance of, winning and making some money. All right, so I'm going to place some support and resistance right here, and what I'm looking for is one recent data, like I said, and I'm looking for basically bounces. I'm looking for bounces. I'm looking for previous highs, lows, like my M's, my W's, bridges. Those are what I'm looking for. So clearly right here, I see a bounce right there. Boom. That's a low bounce. So I place a support there. And remember, support is buyers, resistance is sellers. Okay. Now placing another line that I actually see. I see one around here. See this bounce. See one there. Boom. Lines up. See another one here. I'm looking for, this is another bounce. As you can see, it came down, bounced up a little bit. Boom. That's the whole point of support and resistance. They either bounce up, you see a breakout, and they just play within those zones. All right. Now your support and resistance, you got to remember, they're not there to ever stop the market price from ever moving or breaking through them. You want them to break through. Your whole job is to watch how market price reacts to it, and then you react. You don't react before the market does. All right. This is a waiting game. I constantly state that. You want to patiently wait and see what the market does. Okay. So place the line right there, and that's about it. This is on the weekly chart. As I make my way down to the daily, as you can already see, it's looking pretty clean. Place one more around here. This is like kind of a bridge, and then voila. All right. So just by placing support and resistance, you see a clear map. I just created zones. All right. Anybody can use this, the novice trader to the most advanced trader. And just by trading off of these support and resistance, these zones, you create yourself a map, and you can literally just trade off of these areas. All right. Now, as you can see, this is based off the weekly time frame. As you see right here, the market from last week hit a major resistance area. All right. So boom. So after that candlestick closed, we can, based off the daily, when we work our way down to the smaller time frame, we can see that, you know, market price is bouncing off, and as you can clearly see, you know, this candlestick is dropping. So because of this information, based off of last week's time frame for hitting that major resistance, and now working my way down to the daily, you know, based off Friday, actually, yep, this is today, so last Friday, and this would be Thursday. Thursday kind of broke through. Friday, and this is what I stated on my previous webinar for those who attended. Remember, when the market breaks through a support and resistance, you don't jump in quickly. You wait to see what that next candle does, to see if it's going to continue that trend or it's going to reverse and come back. So as you can clearly see, when the next candle formed, the next daily candle, it retraced back. So what previously was resistance now turns into support, and now today's candle, daily candle frame, it's breaking down, and it's probably going to close around here since the end of trading day is already over. Next candle, and I'm looking for all USD to probably retrace back down around this area, possibly all the way down to low 0.72, but we'll see. For sure, I can probably predict they'll come down to low 0.75 100 range. All right. Now, where did we take our trade? Well, that's what you use the smaller time frames for. Use the bigger time frames for true direction. Use the smaller time frames for entries. So now I like to take my trades off the 4 hour and the 1 hour. So if we go off the 1 hour, actually, let's go off the 4 hour. Like I said, hit a major resistance, broke through it, came around. So for those who got in a buy right here, you were good to go because you had your breakthrough candle, candle closed, formed. You got another bullish candle, continue that trend. You could have caught this for a few pips, but then boom, what happened? Sellers took control back of price and started driving it back down. Came down, broke through. A bullish candle tried to break back up, but then sellers took control of price again and then came back around, broke through, and now we're looking for odd USD to possibly retrace back down, possibly around this area, like I stated before. We're looking for odd USD to probably retrace down to around this range, probably a little bit lower. Grab it for, like I stated, about 35, 40 pips, and then get out the market. All right. We're not here to fall in love with the market. We're not here to fall in love with the trades. We're here to make our money and get out as soon as possible. So exactly what I stated before. You wait for a candlestick when it basically gets around market price. We didn't enter here. It broke through. Boom. We waited for the next candle to form to continue on that trend, or if to see it was going to retrace back up. Clearly, it shows that it was a bearish candlestick. Started dropping. We entered ourselves, as I currently did, and as you see, currently up right now. And I'm looking for odd USD to retrace, like I said, come back down around this range, and then that's where I'll probably cash out. As you can see, I already have my take profit set up. That's good for a good 45 plus pips, and then boom, cash out. All right, that's a clean, solid trade. Okay, so once again, guys, just marking up. Just wanted to do this short, quick video and just showing you guys how just placing support and resistance goes a long way. And I wanted to do it on a trade that I was actively in. Okay, so once again, I'm looking for recent data. All right, recent data is important. Okay, I don't want to basically trade off of set support and resistance off of lines that happened back in May of 2012. You can do it, but I'm looking for recent data because recent data is fresh. The likelihood of it happening again is, very strong. So I placed my first support all the way down here off that nice bounce because it bounced off and then it came up all the way over here. My next bounce, I'm looking for my next high low is probably around here. See this? This was a small little bounce and boom. And like I said, it doesn't have to be perfect. It doesn't have to. You'll never have that perfect support and resistance. What you're looking to do is get within range. All right. Place another one over here. That's another bounce. Little bounce. Boom. And then make my way over to the daily. See what's going on over here. And place one more around here. All right. Boom. And I created myself a nice map. And as you can see, market price respects these zones. And every time it breaks through or enters a new zone, you can literally ride that trade from, like, let's say here, like how it broke through here, all the way down here. You could ride it all the way down here. And as you can see, once it touched the low over here, it came back over here. You could have taken a buy, ride it all the way up here. Once it broke through here, you could have taken a buy on this second, third candlestick and rode it all the way up to the next resistance level. All right, so that's how you play, and you basically trade off of these support and resistance. So you wait for market price to get around them. You don't jump the gun. You see what it does, whether it's either going to do a breakout or it's going to reverse off of them, and then you enter your trade, and that's how you execute. All right, so thank you guys very much for tuning in. I just wanted to cut this short video. You guys have a great day. Also, on my next one, I'll give you an update how we do on this trade. You guys all take care.